More than $30.8 trillion. That's how much debt the country is in right now. At an event today, Federal Reserve Chairman Jerome Powell said the Fed will continue to raise interest rates to fight inflation. News 8 Now's Rob Romano tells us how you can protect your money amid all the uncertainty. Good evening, Rob.
Good evening, Ken. The Federal Reserve has increased rates a couple of times this year to reduce inflation. But whether the economy is in decent shape or not, our national debt sitting at above $30.8 trillion has some financial professionals concerned.
The problem is going to be if interest rates keep going higher, we're going to get to where we can't even pay the interest rate on that debt.
Mike Klug has worked in financial services for more than 42 years. He predicts that the Fed is going to keep raising interest rates, but this could lead to a recession because higher rates on credit cards and other items might cause consumers to reduce their spending.
They're doing the higher interest rates to slow inflation down, but people with credit cards, buying cars, buying houses, it's going to hurt that area big time.
The government has not let up on tightening interest rates. Both earlier today and in late August, Fed Chair Jerome Powell said the government will do what it takes to keep prices stable.
The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal.
The Dow Jones Industrial Average has fallen more than 12.5% since the start of this year. It remains unclear if the U.S. is in a recession or not. Regardless, Klug says there are things you can do to protect your money amid the uncertainty. He says to start by paying down your own debt and to invest in precious metals.
Silver is the most undervalued metal, probably one of the most undervalued commodities.
Despite a 3.7% unemployment rate, Klug claims that high inflation is a symptom of an even sicker economy.
Nobody's looking at that debt going from 10 trillion to 15 trillion to 20 trillion and now to 30 trillion. We've stretched the rubber band about as far as we can stretch it, and now we're going to pay for it.
The next update. Consumer Price Index is expected on September 13th. The previous update said consumer prices rose 8.5% from July 2021 to July of this year. Ken, back to you.
All right, thanks a lot, Rob. Inflation has also been impacting the housing market. The rate of a 30-year fixed mortgage is now averaging 5.89%. According to Freddie Mac, that's the highest rate since 2008.